Welcome to the deep dive. Today, we're plunging into something pretty topical, especially if you're anywhere near Austin.
Yeah, that's right. The Austin apartment market has been on quite a roller coaster.
Exactly. And we're basing this deep dive on a really interesting article actually just published yesterday. It lays out some, well, pretty unprecedented shifts.
Mm-hmm. Big changes.
So, our mission today is really to unpack what's going on in Austin's rental scene, understand what these huge changes mean for everyone involved.
Renters, landlords, developers, the whole ecosystem.
Yeah. I mean, I've seen the headlines and they're dramatic.
Yeah.
Things like rents down, what, 17%?
Around that, yeah.
Huh?
And vacancy hitting double digits.
Right, 10% vacancy. So the big questions are, how did we get here? And what does it actually mean for you? Let's try and figure this out.
Well, the core finding, really, is that the Austin apartment market is going through a pretty significant correction.
A correction.
Yeah, the source puts it plainly. Vacancy rates are the highest they've been in recent history, and rents are definitely sliding down.
So it's that classic economic thing, right? Supply and demand.
Exactly. The article calls it a classic case of oversupply meeting softening demand. Just means way more apartments got built than there are people looking to rent them right now, basically.
Okay, let's put some numbers on that. The article gets specific about, say, two-bedroom apartments as of this June 2025.
It does. The vacancy rate for those hit 10.01%.
10.01. That sounds high. How high is that historically?
It's very high for Austin. Actually, the highest in over 20 years.
Wow, 20 years.
Yeah. And what's really fascinating, or maybe alarming, depending on your perspective, is the speed.
How fast it changed.
Incredibly fast. That 10.01%. It's a 152.78% increase.
Whoa.
From the low point, which was just 3.96% vacancy back in September 2021.
September 2021 doesn't feel that long ago.
It really isn't. It's like the market went from 0 to 60, then slammed on the brakes. A really rapid shift.
Okay, so vacancy shot up. The next logical thing people care about, especially renters, is the price tag. What happened to rents?
Well, they peaked, according to the source, for a two-bedroom at $7,726 a month. That was back in August 2022.
August 2022. And now?
Now, as of June 2025, they've dropped to $1,425.
Okay, do the math for me.
That's a fall of about 17.44%.
17.44%. That's a pretty significant drop.
It is, and it ties directly back to what we were just talking about, those rising vacancies, the whole supply-demand thing. More empty places, landlords have to compete harder.
Which naturally pushes prices down. So here's the big question then. Rents are down 17%. Is Austin affordable again? Is this it?
Well, that's the million-dollar question, isn't it?
Yeah.
Or maybe the $1,425 question.
Uh,
Look, while the drop is significant, the source is pretty clear that affordability is still a major challenge for a lot of people.
So cheaper, but not necessarily cheap.
Exactly. Even with that 17% drop, current rents are still roughly 20% higher than they were at the start of 2021.
20% higher than just before things really took off.
Right. And for context, remember that lowest vacancy point, September 2021? Even then, when the market was super tight, the average rent was $1,594.
So today's $1,425 is lower than that peak tightness, but still way up from pre-boom.
Precisely. It connects to the bigger picture. The baseline cost of living in Austin has shifted. It's better for renters now than it was at the peak, for sure, but maybe not back to what some folks remember as affordable Austin.
That makes sense. It puts the numbers in perspective. Okay, so this huge oversupply, it didn't just happen by magic. Where did all these apartments come from? This is where it gets really interesting, I think.
Yeah, this part of the story goes back a bit. The source points to a really aggressive period of multifamily development.
Like building apartment buildings like crazy?
Pretty much. Between 2019 and 2022, Austin saw what the article calls an unprecedented surge in building permits for apartments.
Unprecedented. Any specific numbers?
Oh, yeah. Annual totals were consistently over 20,000 units permitted each year in that window.
20,000 a year.
And the peak was 2021, nearly 25,000 new multifamily permits issued that year alone.
Okay, wow. That's a lot of future apartments.
It is. And the key thing is the timeline. Most of these projects take, maybe 18 to 36 months to actually build.
So the permits issued in 2021 and 2022
are the units that are, quote, now hitting the market.
Right when demand is softening a bit because of, well, the economy and maybe prices just got too high for some people.
Exactly. The source mentions economic headwinds and affordability concerns, putting downward pressure on demand, even though Austin's still growing population-wise.
So the timing was just off.
Way off. The sheer volume of new apartments coming online just completely far outpaced demand, created this imbalance we're seeing now.
Okay, so we've got the picture. Massive supply hitting softer demand, leading to high vacancy and falling rents. What does this actually mean for people on the ground in Austin? Let's break down the impact.
Right, it affects different groups very differently. Let's start with renters.
Okay, what's in it for them?
For renters, it's generally good news. They can expect more concessions from landlords.
Concessions, like what? A month free?
Yeah, things like a month or two of free rent, maybe waived application fees, sometimes covering moving costs, maybe even upgrades inside the apartment. Landlords are trying to sweeten the deal.
Makes sense. More choice too, presumably.
Definitely more available units to pick from. And crucially, renters have greater negotiating power. You might actually be able to haggle a bit on the rent or lease terms.
So a better time to be looking for an apartment than, say, a year or two ago.
Much better. The source even says the coming months and years may offer more favorable conditions than have been seen in nearly a decade.
Nearly a decade. Okay, that's a strong statement. But what about the folks on the other side? The landlords, the property managers?
Well, for them, it's tougher. They're facing a lot of pressure to, lower rents, offer those incentives we just talked about.
Yeah.
They have to compete much more aggressively just to get tenants in the door.
And what about the people who funded and built all these new apartments, the developers and investors?
For them, the environment is now significantly more challenging.
How so?
Well, for one, lease-up periods are getting longer. That's the time it takes to fill up a brand new building with tenants.
So buildings are sitting partially empty for longer. That costs money.
It does. And maybe more importantly, the rents they can actually charge now are often falling short of their original projections.
The pro forma projections. The forecasts they made back in 2021 or 2022 when they decided to build.
Exactly those. They likely budgeted based on continued rent growth, or at least stability at those peak levels. But the market turned. So their expected returns might not materialize.
So definitely a challenging time if you invested heavily in Austin multifamily recently.
Okay, this feels like a major shift, a rebalancing. Where does it go from here? Is this correction almost done, or are we in for a longer period of this?
That's the big question looking ahead. Based on history, the source suggests that once vacancy rates go above 10%, like they are now,
Yeah.
markets often need several years to stabilize. It's not usually a quick bounce back.
Several years. And is more supply still coming?
It is. The date shows that just through May of this year, 2025, over 4,300 new multifamily units have already been permitted.
So the pipeline isn't empty yet.
Not at all. That means additional inventory will continue entering the market well into 2026 and beyond.
Yeah.
Which, raises questions about how quickly things can really recover.
Right. More supply still on the way complicates things. So what needs to happen for the market to find its footing again?
The source lays out three key factors, basically. First, pretty obviously, the pace of new construction has to slow down significantly. Let the market absorb what's already built. Okay, fewer new buildings starting up. Makes sense. What else?
Second, Austin needs continued strong job growth and population growth. You need people moving in, getting jobs, needing places to live to eventually fill up those empty units. Demand needs to keep pace.
Keep the demand side strong. Got it? And the third?
The third is affordability. It needs to genuinely improve for a wider range of people. If rents stay too high relative to incomes, even if they've dropped from the peak, it limits how many people can actually afford to rent these places.
So slow construction, keep attracting people and jobs, and make sure prices actually align better with what people earn.
That's the recipe for stabilization, according to the source. Until those three things really align, it's likely that we'll continue to see these elevated vacancy rates and the downward pressure on rent persisting.
Okay, so wrapping this up then. This deep dive really paints a picture of the Austin apartment market going through, as the source puts it, a necessary and predictable correction.
Yeah, necessary and predictable are interesting words there. A big adjustment after a period of extreme growth.
Absolutely, and the headline numbers are stark. Vacancy at a 20-year high, rents down over 17% from that peak. It's a really dynamic, transformative moment for housing in the city.
It really is. And maybe a final thought for you, the listener, to chew on.
Yeah.
Given this big shift, this rebalancing we've talked about,
Mm-hmm.
what could it mean for the sort of long-term character of Austin, beyond just the rent prices.
Interesting. Like how?
Well, could new opportunities pop up for different kinds of communities, maybe smaller businesses? If the rental market becomes genuinely more accessible again, could it change the city's vibe, its makeup, in ways we haven't seen for a while? Something to think about.
That is a lot to think about. Definitely more than just vacancy stats. Thanks for walking us through that. And thank you for joining us for this deep dive into the Austin apartment market. Hopefully you feel a bit more clued in.